What's going on, guys? It's Graham and welcome back to the channel. Today, we're diving into a topic that's absolutely exploding and changing everything we thought we knew about money. We're talking about the future of finance, specifically how artificial intelligence and cryptocurrencies are rewriting the rules. It might sound complicated, like something out of a science fiction movie, but I promise you, by the end of this, you'll understand it all. We're going to break it down into simple, easy-to-digest pieces so you can see exactly how this impacts your wallet, your investments, and your future. So grab a cup of that iced coffee, get comfortable, and let's get into it. Before we jump in though, I have something for you. Since you're here and ready to learn, I want to help you get started on the right foot. If you take a second right now to go down and smash that subscribe button and turn on the notifications, I have a special gift for you. I've put together a completely free guide, my top 5 beginner tips for smart investing, and it's yours just for joining the community. It's packed with actionable advice that I personally use. All you have to do is subscribe, and you'll find the link to download it. It's my way of saying thank you for your support, and it's the first step toward taking control of your financial future. Now, why are we talking about this today, on July 22nd, 2025? Because the world of money is moving faster than ever before. What worked for our parents, or even what worked 5 years ago, isn't necessarily the best strategy now. New technologies are emerging that offer incredible opportunities, but they also come with new questions. Understanding things like AI and crypto isn't just for tech geeks or Wall Street traders anymore. It's becoming essential for everyone. This knowledge is what will separate those who get ahead from those who get left behind in the coming decade. So let's make sure you're on the right side of that change. Our goal today is simple: to demystify these powerful tools. We're going to explore what they are, how they work, and how you can potentially use them to your advantage. We'll cover everything from how AI can act as your personal financial assistant, to why people are getting so excited about digital currencies like Bitcoin. We'll look at the good, the bad, and the incredible potential that lies ahead. By staying informed, you put yourself in a position of power. You can make smarter decisions, spot new opportunities, and navigate the future with confidence. So, let's begin this journey together. Alright, so let's start with the first piece of the puzzle: artificial intelligence, or AI. You hear this term thrown around everywhere, from your smartphone to your smart home devices, but what does it actually mean, especially when it comes to your money? Think of AI as creating computer systems that can perform tasks that normally require human intelligence. This includes things like learning from experience, understanding language, recognizing patterns, and making decisions. It's not about robots taking over the world, it's about creating smart software that can analyze vast amounts of information way faster and more accurately than any human ever could. Imagine you had a super smart assistant who never sleeps, never makes a mistake, and has read every financial book and market report ever written. That's essentially what AI brings to the table. In finance, this is an absolute game changer. The financial world is built on data. Stock prices, economic reports, interest rates, consumer spending habits, you name it. For a person, sifting through all of that to find a meaningful pattern is nearly impossible. But for an AI, it's just another Tuesday. It can process billions of data points in seconds, identifying trends and risks that would be invisible to the naked eye. The power of AI comes from its ability to learn and adapt. This isn't just a simple calculator running the same formula over and over again. We're talking about machine learning, a type of AI where the system gets smarter on its own. For example, an AI designed to detect credit card fraud doesn't just rely on a fixed set of rules. It analyzes your spending habits, where you shop, how much you typically spend, what time of day you buy things. If a transaction suddenly appears that doesn't fit your normal pattern, like a large purchase in another country at 3 a.m., the AI flags it instantly, protecting your account before you even realize there's a problem. So, why does this matter so much for your personal finances? Because it makes sophisticated financial tools accessible to everyone, not just the ultra-rich. In the past, getting personalized investment advice or a detailed financial plan required hiring an expensive human advisor. Now, AI-powered apps can provide many of these services at a fraction of the cost, or sometimes even for free. This levels the playing field, giving everyday people like you and me access to powerful resources that can help us save more, invest smarter, and build wealth more effectively. AI is democratizing finance, and that's incredibly exciting. Let's get more specific about how AI is already working behind the scenes in the financial world. One of the biggest areas is in banking. Your bank is using AI right now to make your life easier and your money safer. When you deposit a check by taking a picture with your phone, That's AI reading the handwriting and processing the transaction. When you chat with a customer service bot online to ask a question, that's AI providing you with instant answers 24/7. These systems handle the routine tasks, which frees up human employees to help with more complex problems, making the whole banking experience faster and more efficient for you. Beyond basic banking, AI is completely transforming the world of investing. This is where things get really interesting for building wealth. There are now platforms known as robo-advisors that use AI to manage your investment portfolio. You start by answering a few simple questions about your financial goals, your age, and your tolerance for risk. Based on your answers, the AI builds a diversified portfolio of investments for you. But it doesn't stop there. The AI constantly monitors the market and automatically rebalances your portfolio to keep it on track with your goals, a process that used to be complex and time-consuming. AI is also becoming your personal financial management coach. There are tons of apps now that connect to your bank accounts and credit cards and use AI to analyze your spending habits. They can automatically categorize your expenses, showing you exactly where your money is going each month. These apps can identify areas where you might be overspending, find subscriptions you forgot you were paying for, and help you create a realistic budget that you can actually stick to. It's like having a financial watchdog in your pocket, helping you make smarter day-to-day decisions without having to manually track every single penny in a spreadsheet. Ultimately, what AI does is make finance more personalized and proactive. Instead of just showing you a statement of what you've already spent, AI can help you plan for the future. It can analyze your income and spending to predict your future cash flow, letting you know if you're on track to meet your savings goals or if you might face a shortfall. Some advanced systems can even offer personalized suggestions like, you could save an extra $50 this month by reducing your spending on dining out, or, based on your goals, you should consider increasing your retirement contribution by 2%. It's customized, forward-looking advice at your fingertips. Now, let's switch gears and talk about the other half of this financial revolution: cryptocurrency. This is another one of those terms that sounds really technical, but the core idea is pretty straightforward. A cryptocurrency is basically a digital or virtual form of money. Unlike the dollars in your bank account, which are controlled by a central government and banks, cryptocurrencies are decentralized. This means they aren't issued or controlled by any single entity. Instead, they run on a technology called blockchain, which is like a giant public digital ledger that records every transaction. It's a whole new way of thinking about what money can be. The best way to understand the difference is to think about how you send money right now. If you want to send $100 to a friend, you usually have to go through a middleman like a bank or a payment app like Venmo or PayPal. That middleman verifies the transaction, takes a small fee, and moves the money from your account to your friends. With cryptocurrency, you can send that money directly to your friend, person to person, without needing a bank in the middle. The transaction is verified and recorded by a network of computers all around the world on the blockchain, making it a peer-to-peer system. So what is this blockchain technology that powers it all? Imagine a digital notebook that is shared among thousands of computers. Every time a transaction happens, a new entry or block is created. This block contains the details of the transaction, and it's linked to the block before it, creating a chain. Once a block is added to the chain, it's incredibly difficult to change or tamper with because you'd have to change that block and all the blocks that came after it on thousands of computers simultaneously. This is what makes cryptocurrency transactions so secure and transparent. Everyone can see the ledger, but no one can secretly alter it. This concept of decentralization is the most important thing to grasp. Traditional money, also called fiat currency, like the US dollar or the euro, gets its value because a government says it has value and controls its supply. The value of cryptocurrencies, on the other hand, is determined by the people who use them, by supply and demand in an open market. It's a system built on technology and mathematics rather than the authority of a central institution. This opens up a world of possibilities for a financial system that is more global, more open, and potentially more resistant to censorship or manipulation by a single power. So, when people talk about crypto, two names almost always come up: Bitcoin and Ethereum. It's important to know that these are not the same thing. They serve different purposes, kind of like how a savings account and a checking account are both financial tools, but you use them for different reasons. Bitcoin was the very first cryptocurrency, created back in 2009 by a mysterious person or group named Satoshi Nakamoto. Its primary goal was to be a decentralized digital currency, a way to store and send value online without relying on banks. Think of it as digital gold. Its supply is limited, with only 21 million Bitcoin ever to be created, which gives it scarcity, sort of like a precious metal. Bitcoin's main selling point is its simplicity and security as a store of value. Because it was the first and is the most well-known, it has the largest and most secure network. People buy Bitcoin because they believe that, in the long run, its value will increase due to its fixed supply and growing adoption. It's seen as a hedge against inflation and economic instability. When people worry that traditional currencies might lose their value because governments are printing too much money, they might turn to Bitcoin as an alternative place to park their wealth, hoping it will hold its value better over time. Now, Ethereum, which came along a few years after Bitcoin, is a bit different and in some ways more ambitious. While you can use its native currency, Ether, ETH, to send and receive value just like Bitcoin, the Ethereum network is designed to be much more than just digital money. Think of Ethereum as a global decentralized computer. It allows developers to build and run their own decentralized applications, or dApps, on its blockchain. This has led to an explosion of innovation in areas like decentralized finance or DeFi, non-fungible tokens, NFTs, and more. It's less like digital gold and more like a foundation for a new decentralized internet. So if Bitcoin is like digital gold, you can think of Ethereum as digital oil. It's the fuel that powers a whole ecosystem of applications. Every time someone wants to use an app on the Ethereum network, or create an NFT, or execute a smart contract, which is a self-executing contract with the terms of the agreement directly written into code, they have to pay a small transaction fee in Ether. This creates a constant demand for the currency based on the utility of the network itself. While Bitcoin's value is mostly about being a store of value, Ethereum's value is tied to the usefulness and growth of its entire platform. So we've talked about what crypto is, but why are so many people getting excited about it? What is the big attraction? A huge part of the appeal comes down to the idea of financial sovereignty and control. With your money in a traditional bank, you're trusting a third party to hold it for you. While generally safe, there are rules and limitations. The bank can freeze your account, transactions can be blocked, and in extreme economic crises, access to your funds can be restricted. With cryptocurrency, if you hold it in your own personal digital wallet, you have complete control. You are your own bank. No one can take it from you or stop you from sending it, as long as you have your private keys. Another major draw is the potential for high returns. Let's be honest, this is what gets most people's attention. Because cryptocurrencies are a relatively new and volatile asset class, they have the potential for dramatic price increases that you rarely see in the traditional stock market. People have seen stories of early Bitcoin investors turning a few $100s into millions, and that kind of life-changing potential is incredibly compelling. Of course, this volatility is a double-edged sword. Prices can also drop just as dramatically, but the possibility of significant profit is a powerful motivator for many investors who are willing to take on that risk. Privacy is another key factor for some users. While a blockchain like Bitcoin's is transparent in that all transactions are public, the identities behind the wallet addresses are not. It's pseudonymous, not completely anonymous. This offers a level of privacy that can be appealing compared to traditional banking, where your entire financial history is linked to your name and personal information, and can be easily tracked by corporations and governments. For people living in countries with unstable governments or oppressive regimes, cryptocurrency can be a lifeline, offering a way to protect their assets and transact freely without fear of censorship or seizure. Finally, there's the excitement of being part of a technological frontier. For many, investing in crypto is about more than just money. It's about supporting a movement that could fundamentally change the world. They believe that decentralized technology can create a fairer, more transparent, and more efficient financial system for everyone. It's about building a new internet of value, often called Web 3, where users have more ownership and control over their data and digital assets. For these enthusiasts, contributing to and participating in this ecosystem is an investment in a future they want to help create. Okay, this all sounds very futuristic, but how are AI and crypto actually showing up in our day-to-day lives right now? You might be using them more than you think. Let's go back to AI. When you shop on Amazon and it suggests products you might like, that's AI analyzing your browsing history. When you use Netflix and it recommends a new show based on what you've watched, that's AI. In finance, if you've ever applied for a loan or a new credit card online and received an instant approval, you can thank an AI algorithm that assessed your credit worthiness in seconds, a process that used to take days. On the crypto side, adoption is growing slowly but surely. While you probably aren't buying your morning coffee with Bitcoin just yet, more and more major companies are starting to accept it as a form of payment. Companies like Microsoft and AT&T have experimented with accepting crypto payments. More practically, people are using cryptocurrencies for international money transfers. Sending money across borders using traditional banking can be slow and expensive, with high fees and long waiting times. Using a cryptocurrency like Bitcoin or a stablecoin, which is a type of crypto pegged to a stable asset like the US dollar, can be much faster and cheaper. A really cool intersection of AI and crypto is happening in the world of decentralized finance, or DeFi. Imagine getting a loan without ever filling out a form or talking to a loan officer. On DeFi platforms, you can use your crypto assets as collateral to borrow money through a smart contract. The AI-like code of the smart contract handles the whole process automatically. It's an open financial system that's available to anyone with an internet connection, without needing permission from a bank. It's still new and risky, but it shows the power of combining these two technologies to create brand new financial products. Another practical example is in the world of content creation and gaming. Some new social media platforms and online games are built on blockchain technology and use their own cryptocurrencies. In these ecosystems, you can earn crypto tokens for creating popular content, or for winning in-game challenges. This gives you true ownership over your digital items and earnings. You're not just playing a game, you're participating in a digital economy, where your skills and contributions have real-world value that you can trade or sell on an open market. This is a huge shift from traditional models where the platform owns and controls everything. Now it's crucial that we talk about the other side of the coin. As exciting as all this technology is, it's not a magical path to guaranteed riches. There are very real risks involved, and you need to be aware of them. The biggest risk with cryptocurrency, as I mentioned earlier, is extreme volatility. The price of Bitcoin or Ethereum can swing by 10% or more in a single day. If you invest money that you can't afford to lose, you could find yourself in a very difficult financial situation. You should never invest more than you are willing to lose completely, especially in such a speculative market. It's not a get-rich-quick scheme. Another major concern is security, but in a different way than you might think. While the blockchain technology itself is very secure, you, the user, are responsible for protecting your own assets. If you lose the password or private keys to your crypto wallet, your money is gone forever. There is no customer service number to call to reset your password. Similarly, the crypto world is full of scams and hacks targeting individual investors. Phishing emails, fake websites, and fraudulent investment schemes are common. You have to be incredibly careful and educate yourself on how to keep your digital assets safe from thieves. When it comes to AI and finance, there are also challenges. One is the risk of bias in algorithms. If an AI is trained on historical data that contains human biases, the AI can learn and even amplify those biases. For example, if an AI for loan applications is trained on data where certain neighborhoods were historically denied loans unfairly, the AI might continue that pattern, leading to digital discrimination. Companies and regulators are working hard to address this, but it's a complex problem to ensure that AI systems are fair and ethical for everyone, regardless of their background. Finally, there's the challenge of regulation. Because this technology is so new, governments around the world are still trying to figure out how to handle it. The rules for cryptocurrencies can change quickly, and new regulations could have a big impact on the market. This uncertainty can be scary for investors. However, it's also a sign that the industry is maturing. Clearer regulations, while they might limit some of the Wild West aspects of crypto, could also bring more stability and legitimacy to the space, encouraging wider adoption and protecting consumers. The road ahead will have bumps, but the overall direction is one of progress and innovation. So, where does this all leave us? We've covered a lot of ground today, from the smart, analytical power of AI to the decentralized, global nature of cryptocurrency. The key takeaway is that the world of money is undergoing a massive transformation, and these technologies are at the heart of it. AI is making financial services smarter, more personal, and more accessible, acting like a co-pilot on your financial journey. At the same time, Cryptocurrencies are challenging our fundamental ideas about what money is, offering a new system built on transparency, security, and user control. This isn't science fiction, it's the reality of finance in 2025. The future of money is likely not going to be a battle of AI versus crypto versus traditional banking. Instead, it's going to be a blend of all three. Your regular bank account will be powered by smarter AI, you might have a portion of your investments in a robo-advisor, and you might hold some digital assets like Bitcoin or Ethereum as part of a diversified, long-term strategy. Understanding how these pieces fit together is the most important skill you can develop for your financial well-being. By staying curious and informed, you empower yourself to take advantage of the opportunities while wisely managing the risks that come with any new frontier. I truly believe that we are living in one of the most exciting times for personal finance. The tools and information available to the average person today are more powerful than what even the wealthiest investors had just a generation ago. The key is to take that first step, to start learning, and to not be intimidated by new ideas. I hope today's discussion has helped to pull back the curtain on AI and crypto, and shown you that these concepts are something you can absolutely understand and engage with. The future is being built right now, and you have a chance to be a part of it. And that brings us to the end. If you found this helpful, and want to continue learning how to build wealth and navigate the future of finance, please do me a huge favor and smash that subscribe button below. It costs you nothing, but it helps the channel out tremendously. And don't forget, as a thank you for joining our community, I have that free gift for you, my guide on the top 5 beginner tips for smart investing. The link is waiting for you. Thank you so much for watching, I appreciate every single one of you, and I'll see you in the next video.